now.
All right, good evening, everybody. Welcome to Public Sector Accounting and Finance. During this course of study, me, myself, and my colleague, Mr. ID, will be joining us to complete this particular course of study. So if I'm taking you this week, he will also be assisting maybe the following week till we finish this whole syllabus. So today we are going to be discussing on Introduction to Public Sector Accounting. We'll also be looking at constitutional and regulatory framework of public sector accounting and finance. I believe by now we will have gone through this slide and see what are the key things that we are in need to have an understanding knowledge on the introduction to public sector accounting and finance, including the regulatory framework of the public sector accounting and finance. At the end of this first study, we are all expected to have a full knowledge of the following subtopic under the introduction to public sector accounting. We have the definition of public sector accounting and some other terminologies that will be used in the definition. We identify the various objectives of public sector accounting and finance. We need to have a basic understanding of the users of public sector accounting information. And lastly, we are going to be discussing on the differences between public sector accounting and private sector accounting. Going into the introduction, before we define public sector accounting, let's make a reference to public sector to financial accounting, which is our conventional financial statement or corporate reporting. From the definition, we are going to derive the definition of public sector accounting. And here, what makes the conventional financial accounting to be different from the public sector accounting is what is known as government. Having made a reference to government, we'll still make a reference to public sector. And therein, we are going to discuss on the definition of public sector accounting and finance. When we're talking about government, this has to do with a set of people that is being appointed to act on behalf of the general public. And this refers to the collection of public institutions established and given the authority to run the affairs of a country. From the definition of government, we move on to public sector. Public sector is an establishment owned and controlled by government on behalf of the general public. The simplest definition of this public sector is all organizations which are not privately owned and operated, but which are established, run, and financed by governments on behalf of the general public. From there, we move on to the definition of public sector accounting and finance. The definition of public sector accounting and finance is only having a little difference with that of conventional financial accounting. In our basic knowledge of financial accounting, we understand that accounting can be defined as a process of recording, classifying, analyzing, summarizing, interpreting, and communicating financial information to the users to enable them to make vital or financial decisions. The same definition can still apply to public sector accounting and finance. Looking at the definition of the conventional financial accounting, What will make a difference is the introduction of government or public sector into the process of financial accounting. Let's take a look at that. We said public sector can be defined as the process of recording, analyzing, classifying, summarizing, communicating, and interpreting financial information. Please underline the word about government. In aggregate and in details. That is, the process of giving a record of financial activities that has occurred on behalf of the general public being managed and controlled by a set of people known as government in total and in details. Recording all these transactions which involve the receipt, transfer, and disposition of public funds and property to enable the users of public sector accounting information make a vital financial decision. Let us take a look at the process and the procedures from that definition of public sector accounting and finance. We said this is a process of recording. Don't forget that I made a reference to our conventional financial reporting, that the only difference between public sector accounting and that of financial accounting is the control, which is being entrusted in a set of people to manage the affairs of a nation on behalf of the general public. So all the time that the terminologies used, we are still having the same meaning to all the terminologies. Just that the procedure of carrying out the process may be different due to the nature of the public sector accounting and that of financial accounting. The first one, which is the recording. Recording involves the process of documenting the financial transactions, putting down the records, details of all financial statements or transactions that has occurred during the tenure of the public officer in the necessary books of accounts. An example of this type of books of accounts, which is we have the cash book, we have the ledger, we have the vote book as well. So recording is the process of documenting all financial transactions and activities in the necessary books of accounts. And the purpose of this recording is to ascertain that a particular transaction has occurred and the period at which those transactions were carried out. We have the analyzing. Analyzing involves the process of separating transactions according to their distinct nature and posting them under appropriate heads and sub-heads. In public sector accounting, we make use of heads and sub-heads in classifying or analyzing financial transactions. Classifying has to do with grouping of all transactions into revenue and expenditure description. Majorly, in public sector accounting, we usually have both revenue and expenditure in order to determine if the government are running on deficit or surplus. And this revenue and expenditure also has different heads and sub-heads. I'm bringing all these classes under major revenue head and sub-heads with their relevant code numbers of accounts. Summarizing, this is concerned with the bringing together of all classes of accounts and preparing them into reports periodically as statutorily or organizationally required. Having defined what public sector accounting is all about and differentiating or looking at the meaning of some terminologies used in the definition, we're moving on to the general objectives of public sector accounting. The nature of public sector refers to all organizations which are created, administered, and financed by governments from the taxpayers' money on behalf of the general public. The following are the general objectives of public sector accounting, which include the following. We have ascertaining the legitimacy of transactions and their compliance with the established norms, regulations, and status. One of the purposes of which public sector accounting is being created is to ascertain the truthfulness, the legitimacy of transactions that has occurred while the public officers are in office, and monitoring all these transactions based on the compliance and how it was stated by law to be carried out. Under the public sector accounting, we're having the laws that guide the preparation and presentation of financial information, which is found under the International Public Sector Accounting Standard. The next purpose, which is providing evidence of stewardship, and which is one of the responsibility of the appointed officers who are entrusted with the fund of the general public, to give a detailed accountability of all financial transactions that has occurred from the beginning of the administration till the end of their tenure. It also assists in planning and control. We make use of public sector accounting reports to carry out a planning for the future forecast and also control the administration on expenditure of the government. It also assists the objective and timely reporting. And this timely reporting were being carried out by both internal users and external users of public sector accounting information. It also provides the basis for decision making. The report of this financial information to the users is to enable all users to make a timely and financial decision and how to improve on such transactions if there are any lapses that may have been detected. It also assists in enhancing the appraisal of the efficiency of management. And how does it enhance the appraisal of the efficiency of management? By measuring the actual performance with budgeted performance. This will be determined from the outcome or the reports that will be submitted by the officers who are entrusted with the public funds. By so, this can make the management to easily carry out an appraisal on the performance of the public officers that are entrusted with public funds. An example of which are the presidents, we have the executive arm of government, we have the ministers, and we also have heads of ministries and extra-ministerial departments or agencies. Highlighting the various sources of revenue, receivable, and the expenditure to be incurred is also among the objectives of public sector accounting by highlighting all the various sources of revenue, receivable, and expenditure to be incurred. Identifying the sources of funding capital projects. The public sector accounting assists in identifying the sources of funding capital projects in the country, whereby the internally generated revenue, IGR, of a particular country or nation may not be able to cater for capital projects, and which will lead to the reason why the government will need to source for other capital to carry out a capital project in the nation. It also assists in evaluating the economic efficiency and effectiveness with which public sector organizations pursue their goals and objectives. And these are the 3 E's from the value for money, which are economic, effectiveness, and efficiency. Making provision for funds as at when needed, at the appropriate time, and to the right projects. It also assists in ensuring that costs are matched by at least equivalent benefits accruing thereon. And also, it provides the details of outstanding long-term commitments and financial obligations. It also assists in providing a means by which actual performance may be compared with the target set, whereby variance will be derived by comparing previous performance with actual targets. With the actual targets, actual performance compared with the target set, which will be from the budget. And this performance will be measured based on the proposed budget and what was the actual result. With that, variance can easily be identified. By so doing, if there are weaknesses, the government will be easily identified where problem is coming from and how to resolve such problem. And lastly, preferring solutions to the various bottlenecks or problems identified in the financial statements report. I believe we are all following. Are we there? Can you hear me?
Yeah, okay.
All right. Please, if I'm too fast, kindly call my attention. If you have any question, you can put up your hand or unmute the mic, ask your question, then you remute. Have you discussed the general objectives of the public sector accounting? These are further elaborated on this page of the slide. So a further analysis of the most significant objectives of the public sector that has been explained earlier on include the following. The first one, which is the determination of legitimacy of transactions and their compliance with the law, providing evidence of stewardship, that is rendering accounts, giving an account of all the transactions that has occurred based on the funds that is being entrusted on the public officers. Assisting planning and control, ensuring objective and timely reporting, evaluating the cost incurred with the benefits derivable. Next, we are moving on to the users of public sector accounting information. Basically, we're having 2 groups or 2 categories of users in public sector accounting information. So they are internal and external users. And these users are having their areas of interest, which are the expectation of all the users of public sector accounting information. The internal user, which include the following, they are majorly the executive arms of government, the labor union, and the management members of the public sector. The first one, which is the members of the executive arms of government, which include, we have the president, we have the governor, we also have the local government chairman, we have the ministers, and we also have the commissioner at the local, at the state level. all these are members of the executive arms of government. And what are their areas of interest? The major areas of interest of the executive arms of the government are to ensure accountability through record keeping and performance control, which are achieved through accounting information. So the definition of accounting, which are recording, classifying, are the major concern and interest of the executive arms of the government by ensuring accountability through record keeping, not by using a words to give a record without physical confirmation that a particular transaction has actually occurred. And this can now be verified through the audit reports from the Auditor General of the Federation. We have the top management members. These are the permanent secretaries of various ministries and chief executives of parastatals. So they are the conduit of accounting information generation. They transmit the accounting information and serve as a liaison officer between government, employees, and the general public. So they generate the information and also transmit all the information on the accounting information, being the permanent secretaries at all various ministries and departments. And the third, among the internal users of the public sector accounting information, which is the labor union. And the labor union in the public service, which will press for improved conditions of employment and security of tenure for their members. Now we are moving on to the external users of the public sector accounting information. We're having the members of the legislature. This is at both national and state level, and also the local government level. Information on the accounts of governments, which is the major media through which politicians render stewardship, that is giving accountability to their constituencies, that all the members at the national, state, and the local government level give back a report being accountable to all their constituencies, which they are representing at national, state, and local government level, and also appraise them of the endeavors of governance. We have the members of the public among these external users of public sector accounting information. What are their interests? They are to demonstrate accountability and assist the people to appreciate or otherwise the efforts of the government. And these are the general public that gives a detailed record and close monitoring on all the activities that the government are carried out on behalf of the general public. And their major interest is to give back reports to the general public, either to criticize or appraise the accountability demonstrated by the public officers who are entrusted with public funds while in office. We also have researchers and financial journalists. The researchers are those that carried out an historical information, background, study about the government and also on the accountability of government. And it's also extended to the financial journalists that carried out a screening on all funds and reports of the accounting information submitted annually by the federal government or any other government that are entrusted with public funds. And what are their expectations? They are expected to develop new and better ideas of governance if there are lapses and there are new developments that can reduce either the level of poverty or either the rate at which corruption is increasing it is the part of recommendation that will be submitted to the general public and the government at large from both researchers and the financial journalists. The financial journalists cherish accounting information to advise existing and potential investors. They will have find out lapses or any improvements in government accountability, and they give advice to existing investors and that of the potential investors if they are to continue on their investments or they should back out for any investment that they are having in the public sector. We have financial institutions also being part of the external users of public sector accounting information, which are the link between the government and the surplus unit. When we're talking about the surplus unit, they are the intermediary between the governments who are in need of funds to carry out a project, majorly capital project, and the surplus units, who are those that are having excess cash or excess reserve, but do not know where to utilize such funds. So the financial institutions serve as an intermediary between the two parties, which are the surplus unit and the deficit unit. By so doing, they look at when the governments are in need of funds. By approaching the government, carry out an analysis on what will be the purpose of these funds that will be needed. And they will have having a series of investors that are looking for where to invest their fund. So they link this the surplus with the deficit unit. As such as commercial bank, we have the World Bank and International Monetary Fund, IMF. So the accounting information assists them to evaluate the credit rating of a borrowing nation. And how do they evaluate credit rating of a borrowing nation? They carry out what is known as credit record. They review all the credit reports of the borrowing nation. How have they been able to be servicing their current debt? And what are the reliance on their internally generated revenue before they can go into a new borrowing? We have governments apart from the ones reporting. The government collaborate on ideas of investments and also carry out a research. So they require accounting information on well-being or otherwise of each other. And part of the function or the major function objectives of the government is to provide enable environment, welfare for the citizen, and also provide a security. Suppliers and contractors. Suppliers are those who carry out a distribution of items that may be needed by the government to carry out some projects, while contractors are those that execute the projects that has been identified and will be funded by the government. What are the expectations of suppliers and what are the expectations of the contractors? Suppliers and contractors are eager to ascertain the ability of a government to pay for goods and services delivered. Suppliers are looking towards governments to pay back for goods that has been supplied to the government, while the contractors are looking towards governments to complete the project executed, the remaining balance on executed projects for the government. So only accounting information can be revealing. We have political parties, trade unions, and civil liberty organizations among the external users. Foreign countries and foreign financial institutions, such as International Monetary Fund and the World Bank. What are their expectations? Their areas of interest, maybe by looking into countries that are less privileged and look for a way to carry out some support to such particular country. Like other external users, the foreign countries and the financial institutions, the international financial institutions required accounting information to ascertain financial viability of the public sector organizations and efficiency and effectiveness of management. And they also want to know whether the accounting information enhance the quality, consistency, and transparency of the public sector financial reporting. We move on to the comparison between the public sector accounting and the private sector accounting. Please note that examiner can request this particular information to be in tabular form. So if examiner asks us to compare or differentiate between public sector accounting and private sector accounting, it will be preferable to state the points, then use the table to compare between the private and the public sector. But if examiner is not specific about how to attend any question, so you can feel free to attend the question in your best knowledge. One among the main objectives or the differences between the public sector accounting and the private sector accounting. Looking at the objectives or the purpose of these two accounting, we can look at the objective of private sector and also look at the objective of the public sector. With that, we can differentiate between their accounting separately. The main objective of the government, which is the public sector, is providing welfare, security to the general public. While the public sector, the private sector, is being created to maximize the profit of their shareholders. So with that, we can differentiate the difference between their accounting preparation. The private sector accounting is peculiar to commercial undertakings, which have the maximization of profits as their main objective. So the preparation of private sector accounting is to arrive at the profit at the end of their period, which is the main objective of the private sector. While the public sector accounting focuses on the provision of adequate welfare to the people with probity, accountability, legal and wise spending in mind. We have income or revenue. From the objective of the private and the public sector, we also differentiate between their accounting system. The objective of the private sector is to earn profit, is to maximize profit at the end of their accounting period. With that, the main source of revenue from the private sector will be from goods or services rendered, while the public sector generates their revenue from taxation, fines, fees, and so on. Meetings. In the government, there is no annual general meeting of stakeholders or shareholders, unlike the situation with commercial enterprises. What government does is to hold public briefing on specific issues. But the private sector, they usually have what is known as annual general meeting, which will be held among the executive of the sector. We have the public sector accounting, which operates predominantly fund accounting. They make use of fund accounting method in collecting its data and information, while the private sector accounting uses proprietary or ownership style, which discloses the nature and sources of the enterprise's finance or capital structure. So the form of financing a project in public sector, it is through fund accounting. And these sources
is not being generated by government. It is being generated by the general public, which is known as fund accounting. But in private sector, the way they finance their business, which can either be from the shareholders or from the shareholders or other sources of finance, which can be debt, either debt or equity. Equity which can come in form of ownership structure, capital structure, such as ordinary shares and preference share capital. We have classification. Public sector accounting mostly uses the budgetary approach, recording and classifying items of revenue and expenditure under various heads and sub-head. So public sector accounting is being classified under the heads and sub-heads. There are different heads and sub-heads, and the codification for this is only used in the public sector. Private sector accounting equally does budgeting approach as well, just that their revenue and expenditure will be recorded based on the natural description, such as we will have stationery, discount allowed, discount received. All this will only occur under the private sector because of the nature of their transaction. But in public sector, we make use of heads and sub-heads to carry out classification. Public sector organizations are content with pricing products or services at marginal costs, thereby catering for the welfare of the public, while privately owned businesses venture to recover not only marginal costs, but fixed overheads and even earn profit. So under the pricing policy, all services are in the public sector, mostly on the marginal cost. And this marginal cost is majorly to cater for the welfare of the public. But in the private sector, all their expenses are not only on marginal cost, but at other fixed overhead, because private sector usually has a threshold on some of their overheads, which may be fixed in nature. That is, expenditure will be fixed as a certain percentage, which should not exceed in order to generate profit at the end of their financial year. We have reporting. The public sector organizations are accountable to the citizens of the nation through their elected representative, while the private sector concerns are answerable to their owners. So the management of private sector give reports to the owners of the organizations or the directors. Statutory requirements. There are guidelines, rules, and regulations in preparing their financial statements. So the legal basis for public sector accounting is the nation's constitution and act of parliament. And this constitution and the act of parliament, which will be discussed in the regulatory framework of the public sector accounting. Unlike private sector accounting, which draw its existence and strength from Companies Act, which are mostly the Company and Allied Matter Act. Purposes of financial statements. I believe we are still together. Are we following?
Yes.
Yes, we are.
Yes,
All
sir.
right. The financial statements are structured representations of the financial position and economic performance of an entity. It is the face of reports of all organizations by giving a detailed position of a company. And this will usually be found in the statement of financial position. This statement of financial position, which shows all the liability and the assets of the company, which will be a full representation of the company. Specifically, the objectives of general purpose financial reporting in the public sector should be to generate information useful for decision making and also demonstrate the accountability of an entity for resources entrusted to it by providing statistics. And providing this statistic will be on the following basis: on the sources, allocation, and uses of financial resources. And what are the sources? Government generates funds from tax through taxation. On how an entity finances its activities, having sources for finance, there will be a need to follow up on how these finance were being utilized. And for the valuation of entities' ability to finance its activities and to settle liabilities. Settling liabilities in terms of giving back payments to suppliers and also paying all contractors promptly. For the measurement of an entity's performance in respect of the set goals, and these set goals will have been incorporated in the annual budget, which will reveal whether or not an entity has acted within the approved budget. We're moving on to the constitutional and regulatory framework of public sector accounting. Any questions so far before we start this discussion?
Is the recap of the purpose of public sector accounting.
Okay. I'm listening. Your question, please.
I said a recap of the previous slide. The purpose of
Okay, this particular slide, right?
yes.
All right. So this talk about the purposes of financial statements. What is the reason for the presentation? Because there can be a presentation without, there can be a presentation without preparation. And what are the purpose of these financial statements that were being presented? Mostly in private sector, the purpose of presenting a financial statement is to ascertain the position of the entity at the end of the financial year. And how can you determine that? It will be from the statement of financial position, because the financial position will show a detail, a full analysis of the total assets and the total liability, which will also give a full details of how the company will be able to finance, which will include the finance by, if it is through equity or through debt, and if there are any other shareholders that participated into that contributed into the company's accounts. Specifically, the objective of the general purpose of financial reporting in the public sector, which is different from that of corporate reporting, should be to generate information useful for decision making and demonstrate the accountability of an entity for the resources entrusted to it by providing statistics on the following. Okay, so don't worry, you'll get the video lecture. For those that are having network challenge from their end, you'll get the video lecture. Sorry about that. And there will be a need to provide the following statistics, which include the following: on the sources, allocation, and uses of financial resources. And part of these financial resources may be the natural resources that are forming part of revenue to the public sector. And how an entity finances its activities through the sources of finance. There will be statistics of all these activities. And the next one is for the valuation of the entity's ability to finance its activities and settle liability. It is not only sources for fund and financing that fund, but there should be a valuation of how this finance were being utilized. The next one is for the measurement of an entity's performance. When you have been utilizing your sources of finance to the appropriate projects, there will be what is known as performance measurements. And this performance measurement must be working alongside with the set objectives, which will form part of the budget that will have been set at the beginning of the financial year, and which will now reveal whether or not an entity has acted within the approved budget. Is that clear?
Yes, clear.
All right. Now we're moving on to the constitutional and regulatory framework of public sector accounting. We are talking about the constitutional and regulatory framework. These are the guidelines, the laws, the regulation, the statute that govern the preparation and presentation of financial information. Financial statements are not just carried out without having a legal backing or procedures to be carried on. So looking at all the financial and regulatory framework here, we are expected to have a basic knowledge and full understanding on the legal framework of the public sector accounting, the administrative framework of the public sector accounting, and the basis of accounting, also the concept and principles of public sector accounting. The public sector accounting is guided by the Constitution and financial regulations of a nation. So it is concerned with the recording of the mobilization and prudent utilization of the finances of a country. This is a constitutional and regulatory framework in Ghana, which is not applicable to our country. And also we have legal and regulatory provisions in Nigeria, which is governed by the 1999 Constitution. And this Constitution will be reviewed from time to time when the government deems fit any of the provision that may require amendments. The 1999 Constitution of the Federal Republic of Nigeria authorizes the receipt and payment of governments. It spells out the revenue allocation formula between the federal, state, and local governments. That is, having determined the general pool or the general sources of the federation, which is identified under the federation account. Having identified the general sources and the general expenditure, the balance therein will now be distributed among the three tiers of government, which are the federal, state, and local governments. And this is usually determined by the revenue allocation formula. And this is entrusted in some particular segments of the public office. And stipulate the duties and responsibilities of the Auditor General to facilitate reference. Specific areas of the 1999 constitutions and their provisions are stated below. We have section 80, subsection 1 to 4, that talks about the establishment and operation of the Consolidated Revenue Fund. And on this section, this basically discusses on the federal government's accounting, which is different from the federation account, because the federation account is the general pool for the nation, whereby this general pool will have to be distributed between the three tiers of government, federal, state, and local government. And the account of that of federal government, which was stipulated under section 80, subsection 1 to 4, which is known as Consolidated Revenue Fund. We also have section 81, subsection 1 to 4. This provision treats the procedures for authorization of expenditure from the Consolidated Revenue Fund. And these are usually an authority, which is known as warrants, that will be given to specific public officer to release fund for expenditure purposes under the Consolidated Revenue Fund account. We have Section 82 of the 1999 Constitution, where there is no Appropriation Act as yet. This section authorizes the President to withdraw money from the Consolidated Revenue Fund of the Federation for 6 months. So this is a provision when there is no Appropriation Act on any of expenditure that will be carried out. This section gives authority to the President to withdraw money from the Consolidated Revenue Fund account to carry out such projects within 6 months. We have Section 83 that provides for creation of contingencies fund. These contingencies fund are created for unforeseen circumstances which may not necessarily need to be paid for the next annual budget that need urgent attention. This is designed under Section 83 and make provision for the creation of this contingencies fund. And on this contingencies fund can come in from any form. We can have a contribution or transfer from the federal government account, which is known as the Consolidated Revenue Fund account. We have Section 84, which deals with the remuneration of the President and other statutory officers. We have Section 85, that is the audit of the public accounts, which is discussed fully in that section. We have Section 86 and 87 that treat the appointment and tenure of the Auditor General. Section 88 and 89 gives power to the National Assembly to conduct investigations and procure all evidence needed on any arising matter in the financial statement. We have Section 149. Ministers are constitutionally required to declare their assets and liability and oaths of allegiance. Mr. Akinwale Akinifesi, please, your question.
That based on this slide, in the exam, do you normally ask for all these sections?
They may not specifically ask us to narrate the section, but they may ask us to identify some specific section that regulates the financial statements of the public sector. And as you can see, before we start explanation, we were told that these are specific provision, specific areas of what? Of the 1999 Constitution that talks about the financial statements of the public sector, in the public sector. So you may be asked to identify or highlight the specific areas of the 1999 Constitution. Anyone that you remember, it is not necessary you arrange it the way they are here. And you may not remember the section that quotes. For you not to lose the whole mark, if you can't remember the section that quotes about the Consolidated Revenue Fund account, you can see some section states out how the operation of the Consolidated Revenue Fund. We have another section that talks about the remuneration of public officer. We have a section that talks about the appointment and removal of the Auditor General. But if you can remember all this section, and if you look at it, this section follows each other. 80, 81, 82, 3, 4, 5. From 80 to 84, 80 to 82, 80, 81, 82, basically talk about the Consolidated Revenue Fund account. But if you can remember, minimum 5 is still okay. Examiner may not ask us to broadly state out those specific information about the presentation of financial statements, the regulatory framework. Is that clear?
Yeah, it's clear. Thank you.
We have Section 149. And again, from that your question, still referring back to your question, all these sections, we're having accounts for their preparation. And for those that are not having accounting preparation, they are also having theoretical explanation to each one of them. For instance, we're having that of Auditor General, there are powers and duties of public officers, which we are going to discuss on each one of these powers and their appointments. We have the Accountant General, we have the Auditor General, we have the Accounting Officer, we have the Sub-Accounting Officers. I hope that is clear. So if examiners are not bringing it in form of constitutional or regulatory framework, it will also come out. It can either come out here or you find it in the functions and responsibilities of public officers. And the preparation too, on the preparation of their account, looking at section 80, 81, 82, we are going to come across this when we are treating sources of government revenue and federation accounts. All right, let us move on. We have section 149 that discusses ministers are constitutionally required to declare their assets and liabilities and oath of allegiance. Section 162, under this section, the federation as an entity is statutorily required to create the federation account. And this federation account is what is known as the general pool, at which, having determined all the revenue and expenditure, the balance which will be now be distributed among the three tiers of government. So this is discussed, fully discussed under section 162. So the federation as an entity is statutorily required to create the federation account, into which all revenue collected by the government of the federation. When we are talking about government of the federation, we are not referring to the federal government, just that the federal government are those that enforce the revenue to be pulled into this general fund, into this general account. The federal government has its own account of their revenue and their expenditure. All this will be fully discussed when we are treating sources of government revenue. So with some exceptions, which is being paid into this federation account. We have section 163 that deals with the allocation of other resources. Section 164, federal grants in aid of state revenue were treated in that section. And we have section 313, which talks about the system of revenue allocation in accounting for public sector. Let us take a look at controls and other regulatory framework, aside from those that has been stated in the 1999 Constitution. We have the Finance Act of 1958, which is for control and management. This Finance Act stipulates how governments will be funding their expenditure. And this gives a guidelines on all government funds and their utilization. Most of the time, this act is usually amended. And the current one, which is the 2021 Finance Act, which has been passed into law, and that will give a guidelines of government funding. So this is the major law on which the foundation of the public sector accounting rests in Nigeria. So it is a basic law that governs the procedure and control of all financial operations of government. On each annual budget, there are controls that will be put in place and procedures. And out of this control, there are some thresholds that will be given on government spending. Example of which the federal government recently have a new control, finance control on funds that will be distributed to the local governments. Before, I think this was usually being paid to the state before the state will remit to the local government. But based on the amendment, the local government gets in their allocation directly from the federation accounts. So the Act regulates the management and operation of government funds, and it prescribes the books of accounts to be operated and the procedure to be adopted in the preparation of accounts and financial statements. part of which we're having what is known as national charts of accounts, which we're having 6 segments for this national charts of accounts. We have Audit Ordinance of 1956, Act of 1956. Section 13, subsection 1 to 3, mandates the Accountant General of the Federation to furnish the Auditor General for the Federation with the country's financial statements. It is the responsibility of the Accountant General of the Federation to present the financial statements of the Federation to the Auditor General. And within 60 days of the receipt of this financial report from the Accountant General, the Auditor General must submit his own report to each House of Assembly. That is for both national and state House of Assembly at the federal level. Appropriation Acts. These are bills that will be passed into the law for the preparation and the presentations of government finances. So money bills, when passed into law, will become appropriation acts. They regulate financial matters, including payments or withdrawal from the Consolidated Revenue Fund. Appropriation acts are passed yearly. These are usually passed every year for the release of public money so as to render services in the years to which they relate. Budgets are usually prepared annually. And once this budget has been passed, has been submitted by the President, the National and State House of Assembly carry out investigation on this budget, which will be sent back to the President for the President's assent. And before money can be released for the budget that has been approved, it must also pass through the two House of Assembly, both National and the State House of Assembly. And once this money will be assigned for a particular project, this will become appropriation acts. And these are usually signed every year. So appropriation acts may direct a change in the way of operating any fund. So apart from the contingency fund and the Consolidated Revenue Fund, we have the financial regulations, 2009 edition. So they are accounting and financial control documents. As a regulatory instrument, financial regulations book is the codification of guiding principles and methods. And this advocates for uniformity in the recording of specified position, transactions, and events. So this brought about the general preparation and recording of transactions. And these are the financial regulators are a body of rules designed to assist the achievement of probity and accountability in government. So examples of these rules deals with the opening of bank accounts, checks, and the collection of revenue. So these financial regulations, before now, I think based on previous running of all government funds, there are usually being different accounts for different purposes in the public sector. Unlike now that they are having a consolidated, which is usually known as treasury single accounts. So example of these regulations is the opening of bank accounts, checks, and collection of revenue. Financial regulation define the duties and responsibilities of finance officers of government and other financial procedures in the public sector. We have the Treasury of Finance circulars and circular letters. These are administrative instruments that are issued for the purpose of guiding day-to-day routine operations of the Department of Government. We're having head of departments, and before any fund will be released, having passed through the Appropriation Act, there will be a warrant that will go through some authorized officers before any of these financials can be carried out. And this will be in form of treasury or circular, finance circulars that will be used to run the day-to-day routine operations of the Department of Government. So they are used in amending existing provisions of the public service rules and financial regulations. We have Fiscal Responsibility Act. The Fiscal Responsibility Act emphasized, Act of 2007, emphasized the preparation of medium-term expenditure framework and budgeting or budgetary execution and achievement targets. And the medium-term expenditure framework, which are usually carried out for a period of three months. And this type of expenditure were being created for some specific purposes. So this act provides for the prudent management of nation's resources, and it also ensures long-term macroeconomic stability of the nation economy. It secures greater accountability and transparency in the fiscal operations within a medium-term fiscal policy framework. This type of framework are usually created for some specific projects which are meant to support the macroeconomic stability of the national economy. And the establishment of the Fiscal Responsibility Commission to ensure the promotion and enforcement of the nation's objective, economic objective. And this emphasizes on the medium-term expenditure framework for the collection of public revenue, public expenditure, debt and indebtedness, borrowing, transparency, and accountability. We have the Public Procurement Act of 2007. This act stipulates the procedure, authorities that are guiding the procurement of public items or goods. This was established by the National Council on Public Procurement, NCPP, and the Bureau of Public Procurement, BPP, as the regulatory authority who are responsible for the monitoring and oversight of public procurements. Harmonizing the existing government policy by regulating, setting standard, and developing the legal framework and professional capacity for the public procurement in Nigeria. And the Act sets standard for organizing procurement, methods of procurement of works, goods, consultancy, and non-consultancy services, as well as the procurement approval threshold limits to goods that will be procured for Bureau of Public Procurement, tender boards, and accounting officers for all ministries, departments, and agencies. Having discussed some of this regulatory framework, we're having other laws and regulations in the Constitution. We have the EFCC. All these laws also support the other regulatory framework in the preparation and presentation of the government financial statements. We have the EFCC Act of 2002, ICPC, Independent Corrupt Practices and Other Related Offenses Commission, Act of 2000. We have the IPSAS and the IFRS, International Public Sector Accounting Standards, and also the International Financial Reporting Standards. We have the Financial Reporting Council Act, FRC. We have the Code of Conduct Bureau, CCB, and also the Code of Conduct Tribunal, CCT, Act of 1991. We have the NAITI, the Nigeria Extractive Industry Transparencies Initiative, Act of 2007, and lastly, Freedom of Information Act of 2011. All these other laws and regulations also has their own functions, their duties, which will be discussed under the ethical issues. Yes, ethical issues in the public sector. I think, ethical issue or current issue in the public sector. Now we move on to the basis of accounting in public sector. The basis of accounting refers to how the transactions of government are recognized and recorded in the accounting books, either cash book, vote book, or any other books of record. So some common basis of accounting that are used are cash and accrual basis. These are the basic basis of accounting, either in public sector or private sector. We are not new to all these bases. We have the cash basis. This cash basis recognizes transaction only when cash is involved in terms of revenue and expenditure, whereby you recognize revenue when cash is received, and also you recognize expenditure when cash is paid, irrespective of when the transaction occurred. Once money is received, income is recognized, whether the goods or services have been supplied or not. While on the other hand, an expenses is recognized as having been made once payment is made, whether benefit has been received or not. I also put this definition in a simple words. Income is recognized as cash is received, and expenditure is recognized as money is being paid. The characteristics of this cash basis, which include the following. This is very simple to develop an accounting system based on mere recording of cash received and cash payment. So there won't be any mix-up. You only recognize and you only record transaction only when cash is involved. This is very simple. Being the cashier and the payer, you record transaction when you receive cash. You record transaction when you pay cash. So that's why it is so simple to operate. Financial statements generated with these techniques are not complicated. Why? All transaction received in cash will be on the receipt or the revenue side, while all transaction that is being paid as an expenditure will be on the expenditure side. And they are very understandable, and the accounting does not require the making of estimates for depreciation or doubtful debt. So it doesn't consider depreciation or doubtful debt or adjustment for accruals or prepayments. Credit is not recognized, so there is no need for adjusting for accruals or prepayments. It facilitates fiscal stewardship in that in public sector where the concept of cash limits is used in budgeting, the uses of resources, compliance can be determined easily. And this is the basis that the governments usually use. So the concept does not make for proper measurement of performance. So it is not easy to measure the physical work produced and the assets consumed in doing that within a period of time. So therefore, the techniques does not recognize the time when resources are used. So if you purchase any assets now, you only recognize that transaction when you purchase, but you don't recognize when these assets will be put to use. Performance under this approach is poorly measured since recognition is given to the use of limited cash in any service delivery. So this approach may not be necessarily need to measure the recognition of when the cash is being utilized, but it's only recognized only when cash is received. So either these services, when you make payment for services, either the services has been rendered or not, once the payment has been made, it has been recognized that the transaction has occurred. So the cash basis stresses the economy of a service very much and does not consider the efficiency and effectiveness in service delivery. So you can monitor either the service has eventually occurred, provided that you have recorded the transaction as an expense when cash is being paid. In accounting for the existing resources of government, only cash and near cash items are shown on the balance sheets. And when we're talking about the near cash, these are assets that can easily be converted into cash, and part of which are government's property. We have the traditional accounting in governments is based on cash accounting. So government final accounts are prepared using only movement of cash as a means of determining income and expenditure. We have the accrual basis, which is the opposite of the cash basis. This accrual basis recognizes transaction or recognizes revenue and expenditure when transaction has occurred. So the accrual basis of accounting uses the notion of legal obligation, that is when transaction has been signed or legally put into contract. That is, I am to render social service for social amount, or I am to receive social amount in social period. So it doesn't recognize when cash is actually taking place. Once there is a legal binding contract for the receipt of or render of services, recognition will be given to the income or expenditure arising out of the contract. The recognition of revenue or expenditure under this technique does not depend on the points in time when cash moves as either receipt of or payment as with the cash basis. The concept recognizes the period when revenue is deemed to have been earned rather than when it is received. So revenue is earned when a benefit has been given, and the giver is entitled to legally to receive compensation, while expenditure, on the other hand, are recognized when incurred rather than paid. Expenditure are incurred when users of the benefits are obliged legally to pay in exchange. We have the modified accrual basis. This basis, the basic feature of the modified accrual basis is that it combines the cash accrual basis, cash and accrual basis of recognizing revenue. The modified accrual concept recognizes revenue only when made available and can be measured. So this recognized revenue only when this revenue is made available and can be measured reliably. So revenue is recognized and recorded when received as cash or collectible, that is, it gives room for either cash payment or what? Or prepayment, or collectible in some future time. Carrying out a transaction. Do you have your cash presently? Yes, you recognize the transaction. Do you have your cash at hand? No, I'm going to pay in so period. You also recognize that transaction. Even if part payment is being made now, and there will be a reference to the remaining balance, this is what is known as modified accrual basis. It gives room for both cash and accrual basis. So with some certainty. So for example, under the modified accrual basis, revenue from property tax is recognized because the assets on which the tax is accessible are made and can be identified easily. On the other hand, expenditure will be recognized for most items on the normal accrual basis. We have the modified cash basis. The concept of modified cash basis in some instances resembles the modified accrual basis, but the modified cash basis accounting techniques is appreciated where accounting books. So Mr. Akinwale, please, your question.
Thank you, sir. Please, sir, I just want to go more further in details. Each of this revenue from property tax is recognized.
Okay, under the sample, right? For the modified
the example,
accrual basis.
Yeah.
All right.
For modified accrual basis.
All right. So the modified accrual basis, revenue from property tax it's recognized because the assets on which the tax assessments are made can be identified easily. Any tax accrued on property will be identified on the assessment of such property. So revenue receipts from fines and court charges are recognized on cash basis since they cannot be predicted and estimated with certainty. What does this mean is that you can ascertain the tax liability on property that are chargeable to tax, while the receipt of revenue from fines, court fees, charges, which cannot be recognized until the cash has been paid, because there are no measures to the collections of fines or court fee until when these payments were being made or charges has been identified, the type of offenses and the penalties that are accruing. But before these fines can be charged on fines, fees, or any other penalty on individuals, before this can be liable on individuals, there must be an investigation that will be carried out. What type of offenses that is being carried out by a particular person and what is the penalty deemed fit. But on property tax, there will be an identified tax that will be assessing on such property. On that recognition will be ascertained easily because of the nature of property. Are you with me?
Yes, I'm with you. Yeah. Okay.
Is that clear?
That's clear.
All right. Now, moving on to the modified cash basis. The modified cash accounting techniques is used in government institutions when the books of accounts are not closed for some period. And the reason for this is that it will allow for some cash transactions that's supposed to have been carried out in the previous year financial statement, thereby leaving the books of accounts open for a specified period of time. And once the transaction, the cash is being received within the specified period after the year end, this will now be recognized as either receipt or expenditure on such particular transaction, because this is being recognized as what? Cash, based on the cash basis. So this concept allows the books of accounts of government to be left open for a specific period of time and recognize transaction when cash occurred. So receipts made during the current year, which relate to the past period, are recorded and accounted for as revenue of the previous period. So that is the purpose of modified cash basis. So it gives room for some cash transaction that are relating to previous financial year. And once transaction occurred with the movement of cash, such transaction will be recognized as what? As revenue or expenditure for the previous fiscal year. That's on the modified cash basis. And lastly, we have the commitment basis. The accounting techniques under the commitment basis recognizes expenses as soon as expenditure decisions are taken. Either you are paying by cash, or you are paying in accrue, or you are paying in the future period. Once there is a deliberation and at the board meeting or at a discussion period, there have been a certain amount that were deliberated on to carry out a specific transaction. Such transaction will be recorded and will be recognized as being transaction, it has been occurred. So this accounting technique recognizes expenses as soon as expenditure decisions are taken. As soon as a decision is taken for the acquisition of a services or good, accounting records for that will begin and cash will be set aside to pay for such costs. Either the transaction will later occur or not. The transaction will be recorded immediately as soon as decision is taken.
Mr.
So explanation on. Hello?
Somebody's hand is up.
Okay.
Mr. Akinwale, please go ahead with your question.
Okay, I think he has asked his question. Maybe he forgot to bring
Okay,
down
continue
his
then.
hand. All right, explanation on this commitment basis. Financial transactions are therefore recorded as soon as commitments are made. So it is not when there is movement of cash or a transaction for a transaction, or where there is documentary evidence in the form of invoice. Either you have raised a local purchasing order. There are some transactions that will require a local purchasing order that will give a payment advice on the transaction. And once this local purchase order were being deliberated at the board meeting and the management or the directors approve such transaction, immediately decision is made on that transaction, cash will be set aside to carry out the transaction, and the transaction will be recorded as if it has been treated. So this policy says to encumbrance accounting cash is encumbered when it is set aside for transaction. So either the transaction later take place or not, it will be recorded as being utilized. Advantages of financial regulations accounting manuals. This accounting regulations manual, the financial regulation accounting manual, spells out the procedures, rules, regulations, guidelines on how financial statements of the government will be carried out. And these are the advantages. The book acts as a point of vengeance for those who infringe the rules that are stipulated. So there will be a sanction on anyone, either public officers or the general public, that are going against the laid down rules and procedures that has been stipulated. It ensures consistency in the application of its stipulations, and when there are laid down rules or general guidelines, it ensures that all the officers are complying, and there will be a standard that all the officers are complying with the stipulation. It ensures continuity. It serves as a training tool and also serves as a guide. The disadvantages: it is very rigid, since its application does not encourage the use of initiative. The application of financial regulation accounting manual doesn't require thinking, but there are guidelines, rules that need to be followed. So this makes it to be difficulty to the users. Since the use of initiative is not encouraged, it is demotivational. And when there are changes to procedures, some will look at it to be beneficial, while some other party will look at it to be disadvantaged. And with this, it will encourage anyone that may be demotivated. It makes job monotonous, and workers may not produce best results in view of the demotivational factors. Lastly, we are looking at the funding principles in the public sector accounting. We said, as part of the differences that we identify under the public sector accounting and the private sector accounting, which shows that governments carry out funding principle, which does not allow or is not allowed in the private sector, because the private sector, which is usually being financed by the owners or through debt, either through equity or debt. But in government, this account is not being owned by individual, which is owned by the general public. So fund accounting is one of the fundamental principles underlying government accounting. So So government income is categorized into series of funds for stewardship purposes, and each fund caters for a specific welfare activities of the government. These are the classes. We're having 3 categories of fund, whereby we're having different types of funding in the public sector. Fund can be classified into 3 categories. We have the government fund, we have the proprietary funds, and we have the fiduciary funds. The government funds are used to accrue for resources which are derived from the general tax and revenue powers of the government. We're talking about the revenue powers of the government, that is from other sources of government revenue. Examples are debt service fund, special fund, and revolving fund. The other type of fund, or the other category of fund, which is known as proprietary fund. These are funds that are used to account for the resources derived from the business activities of the government and its agencies, such as parastatals. We're having some government business enterprises, GBEs, that is government-owned and controlled business enterprises. So these are the type of funds that are being generated by the government through the business activities of the government and agencies such as parastatals. Example are various recurrent and capital funds released to government business entities to carry out their operation. An example of this, which is known as the NNPC.
Am I the only one not hearing again?
But it seems Mr. Wahab left, maybe network issue.
Oh, okay.
I think his system went off because I heard a sound. He's back now. He's back.
Hello, please, can you hear me?
Yes.
Yes, we can. Yes, we can.
I can hear you. All right. Please hold on. Sorry for the interruption.
I cannot hear anything. Can you hear me, sir?
I think he's trying to work on his system.
Okay.
Hello. Hello, please, are we there?
Yes, can hear you now.
We are here. We are here.
So sorry about this inconvenience. So I was trying to put on my system back. The system went off unexpectedly. And I was trying to use this phone to continue, but unable to share the slide. So that was what I was trying to do for some moments. And I think the funding principle, which is the last slide on that particular topic, please, I'm going to make it up for us in the next class. That will be the first discussion in the coming class. So thank you all for your time. And I want us to review what we have studied today. Go back to it. The video is there. The admin is going to share us the link to watch the video. And if you have any question, kindly drop it on the WhatsApp platform. I'm available to attend to your request. So thank you all for your time. Sorry for any inconvenience this might cause.
Thank you. Thank you very much, sir.
All right.
Thank you,
Thank you,
sir.
sir.
Bye-bye.